Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the major markets and tells us about crude taking a break while bonds come back from a 7-month hiatus. Anthony Scaramucci, known to many as the Mooch, the founder of Skybridge Capital, gives us his inside look at trade negotiations between the U.S. and China. He tells us if he thinks quantitative easing is around the corner. Polar Futures Group co-founder Victor Adair talks about the relationship between the markets, the U.S. dollar, and gold. Plus, right after the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Always a pleasure, Jim.
Ross, crude oil, the wheels fell off the past week?
They finally did. You know, it took patience on this one, but the seasonal rally was right there on track from December into April, and then we got that slow rolling process. And a week ago we were talking, and it was still sitting around $64. Had 2.5, 3 weeks of just backing and filling, and then this week the wheels fell off. Got down actually under $58 on Thursday and stabilized on Friday into the close at 58 3/4. This is pretty much setting up on the model that we've got. The 10-year cycle was due to have this good rally off December, or not necessarily December, but off the fourth quarter of the year, and have a pause this spring with the pullback into late May, mid-June. Price-wise, we were dealing with a series of moving averages and bands, and as prices stayed up in that 65 to 67 range, those bands came up in price underneath us, and so by the time we got to this week, $58.50 to $59 was anticipated to become the support area. So we've straddled that, saw some stability in the market price on Friday, and actually on the hourly charts, looking at it on a refined basis, we had capitulation lows into the selling midday Thursday, a test of the low on Friday. So there's a chance that crude might get a bit of a bounce out of here. Wouldn't be a tall surprise that if it got back into the low 60s again, it comes back down to test the low. But from where we are now through the end of June, early July, you're probably looking at a very important low, because all of our modeling, when we look at it, forget about the geopolitical aspects that are out there. The modeling would show that out of whatever trough we can put in here in the way of a price, we move up into the about this same time next year, out into March, April, May, and have pause, but go even higher as we go into the latter part of next year. So that's all part of the 2-year rally on this 10-year cycle that we're in. It could be a pretty exciting stretch with some. Now we're starting to just see some exceptional bargains, especially on the Canadian oil and gas stocks. They have just been clobbered in this last week. And we will have specific buy recommendations out for people in the next week and a half to 2 weeks here.
Usually the Canadian dollar is connected to the price of oil. Did the dollar go up when the price of oil was going up, and did it come down when the price came down?
Well, a little bit out of sync right now. You've had the Canadian dollar has been stuck inside a trading range within the last 3 or 4 weeks here. The Strength did not show up when we were up at $64 or $65 oil, so that was negative. Then we started to break down on the oil market, but the Canadian held in. So it's at this point, at a point of, I would say, indecision for the Canadian dollar. And we didn't have any strength related to the agricultural side of things, even though some of these ag prices, corn, wheat, soybeans, have bounced up nicely off their bottoms. But the Canadian dollar just stuck in its trading range. We look for guidance when it starts to deviate from what we're seeing as far as the commodities are concerned. If the oil market holds in here and continues to base out and start back up, then we'll watch really, really carefully to see if the Canadian can come to life on that. So that, to me, that's going to be the key in the next couple of weeks for the Canadian. There's no reason to trade it right now, and patience, just like patience was needed for waiting for the oil market to do something for us, I think patience is needed to see the next direction on the Canadian.
The bond market was kind of a snoozer for the past 7 months. Anything happened there?
Well, when you look at the bond market, you think back, 1981, you had U.S. long bonds, government bonds trading at 15% yield. Unbelievable numbers. And so we ended up with lower rates right through until the summer of 2016. So that 15% yield back in 1981 ended up at just around 2% a year and a half ago. And at that low, we got some really good buy signals as far as interest rates were concerned, and the bond market put out some major sell signals that first week of July in 2016. From there was a good move, and what we've seen here is that as rates rose up into last September, October, they became excessive. We got, in terms of interest rates, we'd gone from 210 up to 340. Pretty big percentage moves when you look at it. A 50% increase in the rates. And at that point in October, we got upside exhaustion signals in the interest rates. Over the next month and a half, we ended up with a double top in rates, and they've been easing down now for the last 7 months, right to a low this week of 2.75%. So from 3.45 down to 2.75. That's a pretty significant drop. And when I look back on our work, we look for anomalies. And that exhaustion signal that we saw in the bonds last October and the breakdown is something that we've seen in the downtrend in rates over this last 30 years or so. There have been 5 other instances that had big percentage moves on the upside, exhaustion points, and then rolled over. And in each one of those, the most recent one being back in 2007, you ended up with a 6.5 to 7.5 months of lower rates. That's what we've done just now. From here, the norm will be that interest rates, which are at 2.75 right now on the long end, probably get back up to 3% or so. So it's going to be a rough stretch for the bond market, I think, as we move through the summer, and interest rates probably bottom out and start to come back again on the upside. Who knows how long it's for, but I would say minimum of 2 to 3 months. We'll see after that. There's definitely going to be some political intervention as far as the front end of the curve is concerned. But on the long end, a 3% handle on the long bond looks to be entirely reasonable.
Ross, do you have any charts for us coming up?
Well, we still got that special $50 for all reports through June the 15th, and we should have, and we've been putting out a fair amount of pertinent short-term opportunities here in the last little while. And I would think that for the investors, we should have a good opportunity for them in both the bonds and over in the energies before that trial period is over.
Ross, thank you so much.
More than welcome.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, The Mooch, Anthony Scaramucci, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Anthony Scaramucci, better known to some people as the Mooch. He's the founder of Skybridge Capital, which you can find online at skybridgecapital.com. He's also the author of the book, Trump, the Blue Collar President. He's speaking to us while he's on his way to the airport somewhere. Anthony, welcome back to This Week in Money.
Hey. Great to be on, Jim. Thank you. Yeah, no, I'm out hustling for money. I'm telling our story to different people out here in the South in Tennessee. So it's great to be on with you.
Anthony, your book, Trump, the Blue Collar President, how's it doing?
Well, it did quite well in October, November, December. It's now been converted into paperback, and I understand it's doing okay. My joke about the book is it's an international bestseller, and if you don't believe me, come into my basement, Jim. I'll show you every copy that I had to buy to make that happen. So, but in fairness, it got to the Wall Street Journal and Publishers Weekly bestseller list. It did not make the New York Times, but still sold pretty well. So we're super happy with that.
Anthony, for people new to Skybridge Capital, what is the company all about, and what does it do?
Well, we have a couple of products. We have a hedge fund product that we offer out to people with a $25,000 minimum, and basically we give people the opportunity to invest in well-known hedge funds that have very, very large minimums. And so we've broken it up so that sort of people that have they have qualified investor status can invest with us, and they can do it with low minimums. And since it's not a partnership, it's more like a corporation, we give people a 1099 at the end of every year as opposed to a K1, so a lot of people like that. We're now investing, Jim, in the Opportunity Zones, which is a tax program from the 2017 tax reform package. And so that's also been a fun project for us. We're creating a private REIT, which will give people a long-term tax elimination strategy. Invest in certain areas of the country that need investments. And then our last product is a dividend value fund, which is a mutual fund. So those three products, plus our SALT conference, which is a internationally recognized conference we do in Las Vegas every year, that keeps us all pretty busy.
The Obama administration made it legal for members of Congress to trade stocks using insider information. Do you think President Trump will put an end to that?
Well, it got voted out after Peter Schweitzer exposed all of that, and then what the Congress did, because they're this type of people, they voted it back in on voice vote so that it wasn't seen on C-SPAN or anything like that. So I think it's a very nefarious practice. I think it's the wrong thing to have happen, and I hope so. But I think the president, unfortunately, has been focused on so many other things at this point. I don't think that's going to get up on the agenda list anytime soon.
Do you think a China-U.S. trade deal will get done?
I do. I think that the cooler heads will prevail, and I'm hoping that by Labor Day it'll get done. I think one of the problems was the president was sort of indicating that he got the better of the deal from the Chinese a few weeks ago, and he was doing that before they signed the deal, and so now they don't have a deal. I think it's better serving the president and the American people if we do these negotiations behind closed doors, because I think they're prideful people, and I think it got their ire up, and I think it's one of the reasons why they pulled back from the deal.
Is the lack of a trade deal between the U.S. and China potentially good for commodity markets?
I think on the margin it could be good, but I think long-term fundamentally, I would say no. I think what would be better for commodity markets in general is just really good, robust global growth, which increases from a fundamental basis commodity prices. So I would say, yeah, on the margin, from a technical short-term perspective, yes, but I would rather see them come to a deal and just grow the global economy in a way that would make that improvement.
Is this trade war between the U.S. and China also a technology war?
Yeah. Well, it's been a technology war since the Internet started, because one of the problems is the United States believes in R&D, and the Chinese believe in RD&T. So they're about research, development, and theft. And so, we've been behind the curve a little bit in blocking them from stealing a lot of commercial and governmental secrets. But I think the good news is that the president has raised awareness of that, and I think that's gotten better and more favorable for America recently, which is long-term good news.
Was it a good move by Google to restrict Huawei's access to the Android operating system?
So I think it was. If you talk to guys like Jim Jones, the former national security advisor for President Obama, or others in the space, they're worried that there's a lot of state sponsorship and state ownership of Huawei, and they're worried that if they get the keys to the 5G kingdom, the Chinese will have access to the globe's information, and globe's technology, the globe's data, the world's data, if you will. And so I think Google has figured out that that would be a dangerous proposition. And so we have to figure out a way to trade with China and engage Huawei, but protect ourselves from Huawei creating a path for information that we would like to be confidential ending up in the hands of the Chinese government.
Are you bullish or bearish on China's stock markets and economy?
I think short term they're going to be under pressure like they were last year. I mean, this trade war, it affects us more from a dollar amount. I think it affects us from a percentage amount less, but our economy is larger. So it hurts us from an absolute dollar amount more. But I mean, they've been absolutely hurt hard in the stock market, their currency, and in their economy as a result of the trade war. So I'm bearish short term, but I think they've got a very powerful economic engine, and barring any real calamities for them, they will likely be the largest economy by, the mid-2030s.
Is the power card that China holds the fact that they could hold back rare earths from the United States?
Some of that is true, but I mean, what you find in the world, and I think the Iranians have discovered this, so did the Iraqis, there is a price for stuff. And so China can withhold it, but it always ends up somewhere in the black market or other markets. And so I'm not super worried about that.
There's the old saying, sell in May and go away. What do you see ahead for the Dow?
Well, I think the Dow is and the S&P are going to be under pressure with the overhang of this trade war. And so, we took 5 points out, rallied back a little. It's gotten a little weaker again recently. I like the economic situation, but I'm not overly optimistic about the stock market here because there's a lot of volatility, and what we're finding is there's some illiquidity going on as well.
President Trump says he's draining the swamp. Is the swamp being drained, and is that good for the U.S. dollar and the Dow?
Well, I don't think the swamp's drainable, Jim. I think it's a gold-plated hot tub without a drain. It's a very corrupt place, and so I don't think he can drain the swamp. I mean, he'd have to get the help from swamp creatures to drain the swamp. And last time I checked, these creatures from the Black Lagoon are dumping more swamp sewage into the system and not taking any of it out. So I think it's a place that has no drain.
Is the economic success of the U.S. under President Trump causing stock market cycles to change?
That's a really good question. And so I wouldn't go by me, but I would reference Warren Buffett on this, who said 3 weeks ago that he's got 76 years of experience investing, been investing since the age of 12. And he would tell you that any time someone tells you that this time is different or that there's been a cyclical change, they're probably overestimating something or you're getting to the peak of a cycle. So I would be cautious on that.
Is the Federal Reserve likely to keep interest rates low?
Well, I think the bias on interest rates is going to be no change for the next 6 to 9 months. But then you'd have to say what happens after that. And when you're borrowing $1 trillion and you're growing at 3+%, you may be entering a low inflation age with high growth, but it doesn't seem likely. I don't see us cheating history. And so I think, 12 months from now, you'd have to assume that the bias for rates will be higher than where they are now.
Are we likely to see another round of quantitative easing?
I don't see that anytime in the future. Obviously, we just ended quantitative tightening, and the Fed has a proclivity to want to reduce its balance sheet exposure. And I think, unfortunately, if we're in a period of quantitative easing again, that means something has really gone wrong economically, and that probably won't be so good for the stock market.
We'll have more with Anthony Scaramucci when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Anthony Scaramucci. Anthony, do you think manufacturing was offshored over the past few decades to destroy America?
Well, I don't think it was planned. I think it was a accidental byproduct of us trying to prop up the global trading system. And us trying, it was really a concerted effort by Treasury, State Department, and it was a bipartisan effort to increase the middle class globally. So we sort of made the trade system uneven and somewhat unfair to the U.S. because we thought that would reduce global conflict. And so it has, by and large, reduced global conflict. We haven't had a global war, but it has had a negative a byproduct of hurting lower middle class people. And I think the president has accurately identified that, and he's working super hard to see if he can put policies in place and legislation in place to correct that.
Some people view that absolute free trade is the best way to go. Let countries or areas that produce things at the cheapest price do that because it's easier for everybody to buy those cheaper goods.
Well, I think that's true in a vacuum and from an academic perspective, but that's never what happens. So each country, and the president said this last year at the G7, that he would take a tariff-free world tomorrow, meaning no tariffs on your goods coming into the U.S., but you can't tariff our goods entering your country, and he would be willing to bet the U.S. economic engine and all of our innovation that would work. But the problem, Jim, is that it never works that way, and so what ends up happening is one person escalates and then the other person escalates to meet them. And unfortunately, from an academic perspective, it sounds great, but in the real world, it's never really worked that way.
A real free trade agreement would be written on one page, wouldn't it?
Yeah, or not at all. You wouldn't even need a free trade agreement, right? You say, okay, here's how we're going to do things. I'm going to sell my goods in your country at a price plus a profit, and you can do the same in my country. No tariffs, no tax, You wouldn't even need a page.
Is globalism being rejected around the world, and is that good for markets and economies?
Well, I think it is on the margin being rejected. There's definitely been a recession in globalism, but I think by and large it's been very good for the world. I think we just have to recognize that there are participants, either due to their labor or their technical skills, haven't been able to participate in the global system, and so we can't leave those people out. We have to come up with policies that lift those people up as well. But I do think that long term we'll get that right, and so the stock markets globally, my bias is that I'm very bullish, but I think that sort of stuff in the short term can cause volatility because it creates political uncertainty and it creates stress in the system.
Is it important to make it easy for the average person to participate in the markets to try and kind of equal out the disparity between the top and the bottom?
Well, I mean, again, here's the big issue. You can't do that through socialism. There's no way you can systematize equal outcome by pushing it down from the government. But I think there are things that we could do we're a smart enough group of people where we could create more equal opportunity. We can figure out ways to right size and correct some of the unevenness of our education system. We could have a more robust industrial policy and infrastructure plan, which would lead to more aggregate wealth. And, you know, we could incentivize people in large corporations through the tax code to pay their employees more money. And if we do those things, I think that's the right path to close that gap that we're all feeling.
Yes, when people have dollars in their pockets, somehow socialism doesn't look so attractive, does it?
Well, that's the good news about socialism. We find that as people age, they become more conservative, and so it reminds me of what Winston Churchill once said: if you're not a liberal in your 20s, you have no heart, but if you're not a conservative by the time you're 40, you have no brain. And so we're watching that happen now, too. As people are aging, the millennials are getting older, you find that they want the free market more than they want socialism.
We'll have more with Anthony Scaramucci when This Week in Money returns.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Anthony Scaramucci. How important is it for the U.S. to stockpile battery metals for electric vehicles, including lithium, cobalt, nickel, manganese, and critical elements like uranium and rare earths?
Well, I think it is important, and I think that that's part of what's lacking in our governmental policy. We should, the same way we did in the 60s, 70s, and 80s, create a strategic petroleum reserve to protect the economy from the exigencies of other nations. We should probably be doing something like that with rare earth minerals. So yes, I do think that's important.
Would you be bullish on sectors that are looking at some of the metals that are used to make electric vehicle batteries, like lithium?
You know, I have to confess that I haven't looked at it closely enough to really opine on it. But, you know, from the distance that I'm looking at it, it sounds like the fundamentals are there, you know, that we're definitely moving in that direction. And so a result of which, you know, my proclivity is to be bullish, but I would really have to do more homework on it than I've done thus far.
Are there sectors you're bullish on and that you're bearish on?
Well, you know, again, I'm long-term bullish on U.S.-centric market, you know, large cap market stocks. I'm probably bearish on interest rates long term. I don't see how we can sustain this growth and get the the interest rate to stay this low. I hope I'm wrong about that. I would love to be pleasantly surprised and be wrong about that, but that is something that I'm actually a little bit worried about.
It's one of the reasons why the U.S. stock market is doing so well is that money is fleeing Europe where they have negative interest rates.
Yeah, no question. I mean, the flight of capital and the economic growth and the strength of our system. And even though the dollar is strong, Jim, you're still attracting the capital. And you know, it's hurting our exports a little, but it's been very, very good for international investment in our market.
With all the confusion over Brexit, is the UK kind of a pariah right now when it comes to investment?
So I'm a contrarian there. I actually like the UK long term. I think that once this thing clears up, they've got a pretty vibrant 60 million person economy. And I tell people London was a financial center before the EU. It was one for 600 years. It's hard-pressed for me to believe that it won't be one if they don't remain in the EU. I think that they're going to be just fine, and I think the forces of human nature and free markets and stuff like that make it a good contrarian buy now. And we just recently opened an office in there, and so we're directionally going in the right direction. Do
gold and silver need a weak U.S. dollar to propel them higher?
Yeah, you know, I think that's a structural thing. I think there's a lot of other stores of value that make that a little bit more difficult. You know, that's a structural thing.
Are you bullish on the oil market?
Well, you know, I think there's a lot of, you're finding that politics is in the way of oil prices. You know, the president's pushing very hard for our allies to bring down oil prices, and so I just think that there's some governmental pressure in there in addition to just market force.
Do you have any general tips on how to build wealth?
Well, the number one thing is saving. You know, you have to take money from your paycheck every week and pay yourself first and put it into large cap stocks. I think that's the safest path.
Where can people buy your book, The Trump Blue Collar President?
Yep, Amazon.com is probably the best place. Also Barnes & Noble.
And how can people find out more about Skybridge Capital?
You know, just go to skybridge.com. We're super accessible, and you can obviously Google my name, and I do a lot of public speaking, and you can find me on YouTube.
Anthony, thank you so much for being on the show.
Okay, God bless. Have a great weekend.
My guest has been Anthony Scaramucci, founder of Skybridge Capital, online at skybridgecapital.com. Coming up, Victor Adair, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. Welcome back to the show, Victor.
Well, thank you, Jim. Good to talk with you.
Victor, for people new to the Polar Futures Group, what are you all about?
The Polar Futures Group is myself and my son, Drew Zimmerman. He's been working with me for about 7 years now, and I've been trading the commodity futures markets for more than 40 years. And that's what we do. We trade those markets. We're both licensed stockbrokers as well. Drew's also a chartered financial analyst. But, you know, our focus is looking at we call it the global macro markets, whether that's currencies or interest rates or stock indices or a whole basket of different kinds of commodities, and we trade them for our own accounts and for our clients.
Now, Drew, everybody's attention has been on this growing trade war between the U.S. and China. Now, is this really a kind of war? Is it about technology? Is it about balance of power, balance of trade? What's really behind it?
Well, I think that's a real interesting part of why the markets turned here. I mean, it was just over 3 weeks ago, the S&P 500 was at all-time highs. And then if you remember, it was on a Sunday, we got some tweets from the president, I think it was the 5th of May, where he just announced he was going to ramp up the tariffs on China. And I think up until that point of time, the market had been thinking, you know, that the trade talks, as we call them then, were going along okay. You know, they weren't going to be perfect, but, you know, it was kind of assumed that both sides would see that it made sense to hit it, you know, strike a deal. But then, you know, since then, I should say, the stock market wobbled when we came off about 5% on the S&P. And I think it was this sort of step-by-step process where we'd gone from something good was going to happen to the two parties were becoming increasingly belligerent with one another. The headlines went from trade talks to trade war to Cold War. And, you know, you'd hear people talking about, well, you know, at least Trump has got the balls to stand up against China. You know, they've been taking advantage of us, ripping us off, and so on and so on. So that kind of, I think that sort of sentiment shift gave the stock market a case of the willies, and prices came down. And at the same time, that and some other things caused the bond market, a flight to safety, to rally. So I'm not sure if I kind of answered your question there, but certainly the game changer, I would say, in terms of the sentiment in the market has been this transformation of trade talks to trade war to now maybe Cold War. And I think that's very much on people's minds.
Well, China has said if things don't work out, it'll start withholding rare earths from the U.S., and China produces the vast majority of rare earths on the planet.
Sure, and that's part of the retaliation. How do the Chinese hit back? They don't have the trade deficit, say, of $500 billion that the Americans have, so, that would be one of their ways to hit back. When the whole Huawei aspect started to blow up, that's where it became a tech war. There's just been this rhetoric that has really been cranked up, and that's given the market a case of the jitters.
The U.S. now says it considers Huawei a security threat and won't use them to develop their 5G network. Should Canada use Huawei? Because they've been urged by other countries like Australia not to.
No, you hit the nail on the head. Australia actually initiated this. This was some of their government hackers, whatever. I read a story about this past week in the Wall Street Journal or something. The Australians started to smell a rat, as it were, first, and started to alert other members of the Five Eyes community. And it seemed as though at first the Americans weren't so keen. They thought, all right, it's a good idea maybe, but now, we've ramped up the pressure, and certainly, what's happened here in Canada with Canada restraining or arresting, I guess, the lady that was the CFO of Huawei, that got us involved. It's a complicated issue. Let's not try to solve it here, but just to say that the transformation of trade talks into trade war, into maybe something more than that, has been very much on the market's mind, and I think that has been a principal thing that's taken the stock market down from the all-time highs we had less than a month ago.
Well, we have to take a look. Huawei, on one hand, says we're not controlled by the Chinese government. On the other hand, the Chinese government not buying Canadian canola or pork and arresting citizens arbitrarily and charging them with serious crimes that could result in the death penalty. And yet they say we're not connected to the government. How can you believe that when you see what the Chinese government has done?
Well, as I say, that is all of this retaliation and tit for tat back and forth has rattled the markets. I'm not going to try to solve a political problem here with logic, okay, because that won't work. But I'm just saying how it shows up in the markets is that uncertainty from the ramping up of the rhetoric, the belligerence, has got the markets worried.
Has this been a classic sell in May and go away market? Because we had all-time highs, and since the start of the month, the markets have fallen.
Well, so far, absolutely. Short answer to your question. There's been other things involved. We talked about this, the trade war aspect. I think another thing is that we've had a terrific rally in the stock markets off of the lows we had in December, and even given that we were way oversold in December, so maybe the 25% rally in some of the broad indices from there was more than it would have been if we hadn't have been so oversold. But the market sentiment, it's like, in a way, if you compare the stock market to the bond market, it's like the bond market is the adult in the room, and the stock market is the excitable child. So the stock market gets more emotional, swings, up and down more than the bond market. And another aspect that has come in here is, we've had people telling us for months now, and I would say David Rosenberg could certainly be one of those, that the economy is slowing. And people that were bullish on the stock market would poo-poo that idea. No, it's not. Well, increasingly, the evidence is coming out that not only the American economy, but the global economy is slowing. Part and parcel of that is the troubles, let's say, that ripple out from the trade talks that are struggling. But I think we're seeing with the bid we've got in the bond market is not just there because the stock market is wobbling. I think the bond market is seeing a slowdown in the economy. We're seeing we've seen here a number of times now, some minor inversions in the yield curve. We are seeing that the market, which back in November was expecting that the Federal Reserve would be raising interest rates in 2019 at least 25 basis points twice, is now pricing in cutting interest rates by that same amount. So that would be, I think, also in response to the sense that economies are slowing. It's not just about a trade war. There's more to it than that.
I remember in 2008, I interviewed Garth Turner, former finance minister, not finance, revenue minister, and he said, Jim, Canada's actually in a recession, but the numbers don't show it yet because of Vancouver real estate and high tech and the Alberta oil patch. My editor even refused to run the story because he said, look at the stock market, it's doing terrific. Well, 9 months later, Canada was officially in a recession. So are we getting some warning signs that recession could be just around the corner? It's just the numbers on the market don't show it yet.
Yeah, it could well be that. There's some people that make calls and, love later on to point out, that they were calling it before anybody else was. That's just the nature of the game. What I do, sit in front of my screens, look at all these markets, read all the research I do. I'm just trying to anticipate where any one of a number of different markets that I pay attention to might go next. And, is there something I can do about it? Is there a trade I can make? I really don't have, let's say, an economist's forecast about what may be happening in the economy has very little input in my decision making of how I'm going to take a position in the market.
The bond market's had a strong rally. Is that because the stock market is falling?
Yeah, as I mentioned, I think that's part of it. The bonds are seen as a flight to safety. The U.S. 10-year Treasury bond, that's the benchmark, ended this week at about a 2.3% yield. That's an 18-month low. Just to put that in perspective, by the way, the German 10-year bond is trading at a negative 12 basis points. Australia, the 10-year down there, just the yield there hit an all-time record low, 1.52%, with the market down there expecting some interest rate cuts from the Reserve Bank of Australia. I think the bond market is getting some flow, and part of that flow would be, for instance, if you can move money anywhere you want in the world, and you need to have some money allocated into the 10-year government bond space, do you want to move your money into Germany at minus 12 basis points, or do you want to move your money into the United States at positive 2.3%? So that creates some of the money flowing, like a magnet pulling money in different ways. But I think, to come back to your question, the stock market being under pressure here, some worries there, will give the bond market a bid. But I think also the bond market's been sensing a slowing economy, and that puts sort of a double whammy, say, into the bond market.
We'll have more with Victor Adair when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Victor Adair. Victor, the U.S. dollar has been strong, but it seemed to falter at the end of the week. Are you still bullish on the greenback?
Yeah, I've been kind of a long-term bull on the U.S. dollar, mostly traded it from the long side, but to cut right to give you an answer, short and sweet. I actually took positions against the U.S. dollar this week, starting Thursday. And that's in my short-term trading, that's where most of my focus is. What I noticed here is that the U.S. dollar index, that is against, let's say, a basket of European currencies, Japanese yen, Canadian dollar, It briefly hit a 2-year high in the middle of the week and then dropped sharply. There is a much broader trade-weighted U.S. dollar index that the Federal Reserve keeps track of, and that came very close to hitting a 25-year high this week, and then it reversed a bit. Another thing that I pay attention to is the positioning in the markets, and we've seen for the past year, speculators have been building a bullish U.S. dollar position. In other words, people that like the U.S. dollar, it's becoming a bit of a crowded trade. And then there was a couple of interesting signals. Sometimes when you're looking for something to support your own point of view, you'll find evidence. But that aside, I noticed the Chinese currency that had been falling like a stone here for the past 3 weeks because of these Cold War kind of worries in the market. It rallied back this week to its best levels in about a week. That's not a big move, but it had happened. And then there was the Norwegian krone and the Russian ruble. Both of these currencies should be very sensitive to oil prices, and yet with oil prices dropping like a stone here this week, both the Norwegian and the Russian currencies were up on the week. So I just wonder, and maybe the other factor, let's go to the euro, starting Thursday, running today and into the weekend, is the election in Europe for the European Parliament. There's 750 seats, I think, coming from 28 different countries. Over 500 million people are eligible to vote, although a lot of them won't even show up. And the market, I think, has been anticipating that maybe the populist movement that's been showing up in different places across Europe might be popular. They might see some people of that kind of a political bent go to the Brussels Parliament. So and if in fact that happens, then I think that's actually bad news for the euro. So this will be a big weekend in terms of where we might go, but it looks as though maybe the U.S. dollar just got a little bit overbought here in the short term, and I'm making a bet that it'll set back. Now, when I make that bet, if it doesn't, then I'm gone quickly, keep my losses small.
So, politically, with Brexit, it's Theresa May, go away. She's resigning June 7th. Any concerns there about international markets, or do you think they'll be able to hammer out a deal by their new deadline of October 31st?
No, I'm actually glad you asked me that, because I forgot to mention the British pound was down for 14 consecutive days. I don't know I've ever seen anything, let alone any currency, down for 14 consecutive days, but I'm sure I could find something if I went and looked. And it rallied this week, on Friday. Now, a little bounce because I think Theresa May said she was going to resign. Brexit has been such a dog's breakfast, and I think it's part of that because the vote to leave was so close, really, across the whole of the UK. And there's a lot at stake, and people are arguing, and they can't come up with a majority. I don't know what is going to happen. Corbyn, the Labour leader, is saying if she steps down, which she has, then it's the right thing to do is to call an election. And of course, a lot of the market's scared to death that if they call an election, he'll get elected and become prime minister. So, Jimmy, honestly, I have no idea what's going to play out with Brexit, and that's my answer.
Gold rallied early in May when the stock market was falling, but then it fell back as the stock market seemed to find its footing. What do you think is going to happen with gold now?
Yeah, well, we've talked about this a couple of times, but it bears repeating. The most important thing over time, it seems, into determining the U.S. dollar price of gold, which is the one we mostly look at, is the relative strength and weakness of the U.S. dollar. So, gold hit its highs over $1,900 an ounce back in 2012 and has weakened on balance since then. And during that same period of time, the U.S. dollar has been strengthening. Now, if I am taking a view here that the U.S. dollar might be a little bit overbought and we might get a bit of a correction, then the gold market might get a little rally. When the gold market rallied middle of this month because the stock market was weak and couldn't sustain itself over $1,300 and started to fall back, I shorted it. This week, when it dropped down below 1270 and couldn't sustain itself below 1270, I didn't want to be short anymore, so I covered it. Right at the moment, I've got no position in gold. I've got no axe to grind. But if the U.S. dollar, where I do have an axe to grind, as I've just pointed out, if the U.S. dollar starts to weaken, that'll put a bid in the gold market.
The Swiss are now working on a cryptocurrency that involves gold. Is this a way to get millennials involved in the gold market? Because right now they don't seem to be interested in precious metals at all.
Yeah, I don't know what's motivating the Swiss to do that. I didn't know they were doing it. I think I kind of, like a lot of folks my age, I sort of tune out cryptocurrencies, and I understand that, as you say, millennials kind of tune out gold. I mean, a lot of folks of my age, and let's say I'm well over 50, remember, the lineups for people in 1980, 81 to buy gold. And, it's been in our consciousness ever since then. Whereas, of course, the millennials weren't even born then. The gold market kind of goes in and out of favor. I'll tell you, I have been trafficking in one way or another in gold since the early 1970s, whether it's bullion, shares in mining companies, futures markets, what have you. And I have noticed the marketing around gold, the things that people who want to sell you something will use to get you excited about buying gold, it's always fear. And when we had that rally up in gold, where we got up to $1,300 recently, a couple of weeks ago, one of the oldest and best fears that has been used to sell gold was out there, and that was the old Strait of Hormuz. The Iranians are gonna close it. There's these attacks on some Saudi ships, and there we go. And I saw the open interest, in other words, the number of traders jump on the gold futures markets. I think we had open interest increased by about it was about 100,000 contracts, and at 100 ounces of gold per contract, it was a lot of gold. And I thought, yeah, the gold bugs just love that Strait of Hormuz story. Well, Jimmy, at the moment, I have no position in gold, and I'm not sure why the Swiss are doing what they're doing.
We'll have more with Victor Adair when This Week in Money returns.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Victor Adair. Victor, the crude oil markets had a sharp fall off the past week. The WTI is down about 12% from the $66 high it hit last month. Is it going to fall further?
Gee whiz, it has had a real sharp fall. And I'll say this, back in, I think it was about the 23rd of April or whatever, we had our high on gold, and I wrote in my on my blog that people can see on our Polar Futures Group page that crude oil had just had its as good as it gets moment, and that has to do with Iran again. The Americans were going to use their best efforts to restrict Iranian oil exports to zero. That was the word they used, and that gave the last couple of dollar run up from around $64 to about $66 on front month WTI on that bit of news, and basically it's been downhill since then. We've seen over the past several months speculators, again, the futures markets, renew their big bullish position in crude oil. Now, it didn't get nearly as big as it did first half of last year, but still, when the market breaks like it broke here the past couple of days, to me, that's a sign that speculators are throwing in the towel, whether it's voluntarily or involuntarily. In other words, they're getting margin calls they can't meet, so the margin clerk sells them out. That was what this sell-off looked like. So that may be a blowout to the downside. We may have cleared the air, as it were, and maybe that's it. The U.S. dollar, if it does weaken, that'll be kind of a positive for crude. But there's also, you get me warmed up, Jimmy, we could go for hours. But I'll tell you, there's been another thing I pay attention to, and that's been the in-syncness of price changes in crude oil and the stock market. Back in October of last year, the stock market was hitting highs, so was crude. In December, they were hitting lows together, and here in the end of April, beginning of May, they're hitting highs together and coming off together. So there is a real correlation between the crude oil price and the price of the broad stock indices. So I think, if you had an opinion if you thought the stock market was going to go down, then you'd be saying crude oil's likely to go with it. Right now, I have no trade on in crude. I will tell you, when I wrote that piece at the end of April, I was looking for an opportunity to get short crude. And it fell so far, so fast, I just couldn't find a spot where I could get a position on. And by that I mean, when I want to put a trade on, I need to know what am I risking. And I was just thinking, if I try to get a position on here, I'm going to risk too much. So, I just couldn't get a trade on, and I just stood there like with my hands in my pockets on the sideline watching the crude oil fall. I will tell you that sometimes missing a trade or not getting a trade on hurts worse than actually losing money on a trade. So I think this was one of those times.
The Canadian dollar seems to have been pretty quiet since we talked a month ago. Do you see that changing?
Yeah, Canada has been really quiet. I mean, we've been in about a half a cent range, and I know it's been poked outside of that a little bit. But for about a month, we've just gone sideways in a half-cent range. The interest rate spread with the United States has moved in Canada's favor. In other words, the premium that you get for putting money in America is not as big a premium as it used to be, but it's still a premium to be in U.S. It seems as though the market, well, I won't say it seems as though, I look at the forward strip, so I know the market is pricing in no cuts from the Bank of Canada over the rest of this year, whereas a few months ago, the market was pricing in that the Bank of Canada would probably cut at least once by a quarter. While at the same time, the forward market is pricing in 2 cuts by the Fed between now and the end of the year. So that's kind of Canada positive. The most important thing to Canada is how the big dollar is doing, and the big dollar has been strong. But again, if it's starting to weaken, then Canada might get a bid. And then, acting as a anchor around the neck of the Canadian dollar has been crude oil. Crude oil takes a dive and is pulling down commodity indices with it. That probably makes it tough for Canadian dollar to rally. So maybe the confluence of those things is why we just kind of been going sideways here in a narrow range for the last month. I've got no position on in Canada, but I'd be interested to buy the Canadian dollar, again, if the U.S. dollar starts to weaken, because for more than the past year, the speculators in the Chicago futures markets have had bearish positions on Canada, and if Canada started to rise, they'd have to cover those positions, and that could give Canada a further kick to the upside.
How are you trading the markets right now?
Well, by right now, let's just say, as of going into this weekend, I have taken kind of a toe in the water size position where I've got a basket of currencies that I bought against the U.S. dollar. I am long the Japanese yen, and that's actually a 180-degree turn of where I was last week. I've been short the yen last week. I actually took profits on that and my short gold as I came into this week. Then I'm flat, and after Thursday, when I started to see what I thought were some early warning signs that maybe the U.S. dollar was going to weaken, I bought Australian dollars, I bought yen, I bought euro, and I bought Swiss. So 2 of those, yen and Swiss, are seen as safe havens. The other, the euro and the Australian in particular, have just been beaten up so bad. I think the Australian dollar is down 10% in the last 3 months. Forgive me if it's something like that. Anyway, they've been really beaten up, as has the euro. So big short positions on those currencies. Again, if the U.S. dollar starts to rally, those currencies could pop. If they don't, my stops are tight. I'll take a small loss.
Victor, with your 40-plus years of trading experience, any words of wisdom before we go?
Well, let's do it this way. I'd say my experience is I think the hardest thing about trading is losing money. And I mean, I lose money a lot. And what losing money means, I buy something and it goes down. Okay. I think people, you like to buy, I mean, for some reason you bought something, obviously you thought it was going to go up, and you're wrong. So we don't like to be told we're wrong. And you need to just get used to, you're going to be wrong a lot. And if that's a real problem for you, you're just not going to do well at trading. Jimmy, I used to say at conferences that I have watched, because of my career where I had a lot of brokers working, for me, and I'd see all the client accounts and that, I have watched hundreds and hundreds of people lose millions and millions of dollars. And I'd say, what is it that they do? What is it that they have in common that I will try to avoid doing? And what they had in common was that they like to give a losing trade just a little more time, see if it won't turn around, because, gee whiz, they like this trade and they know they're right, but the market hasn't got the memo yet or whatever. For me, what I saw from that is, if I put a trade on, before I put it on, I want to know where I'm going to get out if it's not working. I use stops. I buy something, I put a stop in below the market. If the market trades down to there, I'm gone. My loss is small relative to what I think I can make on the trade, and my loss is small relative to the amount of capital that I'm working with. So the old adage, and I'm just giving you maybe more detail than you want, but the old adage is, you got to cut your losses quickly, and you got to be patient with winners. And man, I'll tell you, that's hard to do.
Victor, thank you so much for being on This Week in Money.
Jimmy, it's always fun to talk with you. I really appreciate it. We'll look forward to talking with you again.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Anthony Scaramucci, and Victor Adair. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for company showcase updates from Larry Reaugh, the CEO of American Manganese, and Aben Resources CEO Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, I'm back on the show, and I'm happy to talk to you.
How did your annual general meeting go?
Well, that was good. It's excellent. We had a majority that put the directors back in and approved everything that was on the agenda, and gave me a chance to update the shareholders and the directors that attended. So it was an excellent meeting. And one of the things that I actually saw before we went into the meeting was a graph on called the cold hard truth, and it basically says, once an investor darling, Canada's mining sector is losing its luster and funding. So they had a chart out here that shows what was raised by these mining companies in
from 2011 to 2019. And it was $8 billion in 2011, slipped to half of that in 2012, and half of that again to 2013. Then it bounced around between $2 and $4 million up till 2018. But the real teller on this thing is the last bar chart, and I'm going to include this with the podcast. It shows that only $635 million was raised so far in 2019, which says it's going to be the lowest level ever if it projects onward that way. And they're talking only about deals that closed at more than $1 million. So we'd be included in that. But it really shows the dismal shape of the market at this time. And I've been talking about it on and off for the last several podcasts. But this chart really brings it to light, and I encourage anybody to click on it when they listen to the podcast this time. The deals are going way down. I mean, from about 1,500 back in 2011, 2012, and even in 2016, it was about 1,500, and there's only been 284 deals done in 2019. So that'd be for 5 months, which is unfortunately a dismal return on trying to get investors involved in the mining market. So it's going to be tougher to raise money, but companies with good projects like we have should be able to continue to raise money if they need it. And there's more and more about recycling that's coming out all the time, and there's all kinds of articles which I'll append a couple to on this podcast that are talking about recycling and how important it is and who's involved and everything else. I would just like to say that in less than 3 years, we actually moved from you'd call it a Walking Dead company, from about $0.015 up to 38 almost overnight, and then we've been maintaining a price since that day. But the thing that people don't realize is at the same time, when we did our proof of concept, we had $1 million in debt that we've cleaned off the books. There's no debt in the company. And, it's remarkable that we've raised an extra $6 million to progress and patent our recycling opportunity. So I couldn't be more excited about the milestones that the company has made. Certainly, I know people are impatient, but you don't file patents without doing a lot of work in the background, and then there's other patents that develop out of the current work you're doing, and then it causes changes in the patent applications, or actually filing of new patents. And so here we are, a company that was underwater less than 3 years ago, and now is has a robust process for recycling batteries, which is really needed. And I'm talking about AMY.V, the electric vehicle batteries and the electronics in your handheld devices and laptops and those types of batteries. So it's a great time for the shareholders, and I think they'll realize some benefits here in the next year, starting earlier than that, I would hope. Because we are talking to a lot of very interested people, and I'm talking about companies and robust companies that mark their sales in the billions of dollars. So we're getting their proper attention. And I mentioned last podcast that we should be looking at doing a offtake agreement, and we've had some response on that. So. It couldn't get any better than that, Jim. I think we've accomplished a lot, and I've got some good appendices for this podcast, and stuff that I've been talking about that people have been pushing back on, the financing abilities of the companies. Since we started financing in 2016. There was about almost $5 billion raised, and then 2017, $2.6 billion, 2008, $4.6 billion, and 2018, $2.7 billion. And these are for all the companies in the mining space, and now is $635 million so far in 2019. So that tells me that, maybe $1.5 billion or half of last year's will be raised this year. So, yes, we are in a spiraling market. Commodities are going down, and that's why it's so important to patent every aspect of reducing costs in our process. And we've done that. We've managed to come up with better technology at the end of our process, and this has held up the stages 3 to 5, but now we're working on stages 3 to 5. So, I hope that we're going to meet some deadlines here in the next couple of weeks, and I guess that's probably the end of my podcast for today. There's a holiday in the U.S. Markets on Monday, but we'll be in here on Monday. We don't take U.S. holidays, and because the Toronto Stock Exchange and the venture will be open on Monday, and U.S. will be open again on Tuesday. So I wish everybody a great weekend, and I hope that they look at the appendices, the attachments, because there's some good information in there on recycling, as well as what I've talked about on how the financings are going in the mining community.
Larry, where are you traded and under what symbols?
We're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in the Frankfurt under the symbol 2AM, where you can reach us at 778-574-4444. You can go to our website at AmericanManganeseInc.com and get all the latest news and updates, or email me at lreaugh, LREAUGH, at AMYMN.com.
Larry, thanks for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on May 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO of Aben Resources. Welcome back to the show, Jim.
Thank you, Jim.
It looks like you're all saddled up and ready to head out there. Where are you going, and what are you looking for?
Well, it's going to be a big year, big season. It's not just Forrest Kerr anymore. We're going to go up and spend some money up in the Justin property in the Yukon. For those that don't know about the Justin, we first went up there in 2010. We did work 2010, 11, and 12. Drilled a lot of holes. Discovered a intrusion-related gold system. Very interesting. And then the Yukon fell out of favor. Couldn't raise any more money to do it, but we did drill about 18, 19 holes. Drilled, actually hit gold in 10, 11 of them. It's an interesting system, not uncommon for the Tentina Belt. You've got Fort Knox's intrusion-related gold system, Victoria Gold, Kaminak, and that's has the potential for big tonnage, lower grade. But what's got our interest right now is we've come up through the last few years doing a couple $100,000 worth of work sampling in the vicinity around that zone that we discovered, called the POW zone. And we've come up with an area called the Lost Ace because it's in the same lithology as 3 aces next door to us that Golden Predator has. It's high-grade, orogenic, very coarse gold, very interesting, but we're wondering why it's so close to this intrusion. So it's probably a part of it. It's an older rock the intrusions come up through. So we want to take a look and see if there's some overprinting going on and some possible enrichment. Because you've got one really high-grade style, and you got one big tonnage, lower-grade style. So it's piqued our interest. So we're going to drill up to 10 diamond drill holes and up to 40 RAB drill holes, which are rotary air blast. And you go 20 to 50 meters deep. It's really good for exploratory work. We wouldn't use the information for building a resource or anything, but it's really good for identification when you're in an area of coarse gold and at surface. And then we move on to the Forrest Kerr, right? This will take us about the month of June, and then when we finish there, we should be moving right into the Forrest Kerr, and we're ready to go there. Well, according to Cornell, who runs the program, we'll be drilling June 28th at 4 o'clock.
Jim, for people new to Aben, what are you all about?
We're a gold exploration company. We're listed on the TSX Venture Exchange. Our primary focus is exploring for gold in areas that give us the potential for high grade. Hence the Golden Triangle in northwestern BC and the Yukon. And what we've got planned this year for the Forrest Kerr is pretty exciting. We've got 3 areas identified to start in. Not unlike last year, we knew exactly where to drill. We've got 3 areas we know exactly where to drill, and we're starting next week with an airborne survey, doing MAG survey, geophysical survey, and that'll sort of overlay our geochem survey that's already been done. It's in place. It covers the whole the whole boundary zone. It's about 2 kilometers wide by 4 kilometers long. That is going to generate a lot of targets for us. That's the feeling we've got. And it's going to give us some information a little deeper than what we've been looking at to date, which will be extremely good for us. It's good to know where the source of all this mineralization is coming from that we've been hitting, and make us smarter going forward.
Where are you traded and under what symbols?
We're traded on the Venture Exchange, the TSX Venture Exchange, under the symbol ABN. We're traded on the OTCQB in the States under ABN.V, and then Frankfurt, the Bourse in Frankfurt, E2L2. And you can go to our website, www.abenresources.com. It's a really good website.
Jim, thanks a lot for the update.
You bet. Thanks for calling.
We've been speaking with Jim Pettit, CEO of Aben Resources. I'm Jim Goddard. Our conversation took place on May 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of How Street Media Incorporated.